Happy Friday, guys. Good morning. What's going on? We're about to embark on the long weekend. Monday, again, no trading on Monday, Memorial Day. Probably no afternoon session. Probably heading into the weekend a little early. Looks like it's gonna be a really nice day to start. Open off. We're bid off the open, pre-market open, should say, and has continued since then. About 0.5% on the Dow in small caps, and about a quarter for Nasdaq and S&P. Looks like it's going to be, uh, again, just a question of all-time high or not right off the start. I don't really see it coming later at close or something like that. I would say it's going to be right off the bat. We're right there. We've said it all week. Is it going to be all-time highs this week? Well, retail's going into a frenzy, buying like crazy. AMC is up another 15% this morning. Thankfully, us diamond hands hodlers that held, oofa, oofa, does that one feel good? That I'm probably going to be out pretty quick. I'm probably going to be out of that pretty quick this morning. I've had fun. I'm going to sell the last half, and it's up to you on some of your positions that are a little wild, whether or not you want to take them or not, right? It doesn't, again, it doesn't hurt to take the money home. Pushing the winnings is always fun and nice if you do get it. But over the weekend is a little bit too much for me, and I've already gained a little bit too much to be that sort of risky when it's something that I didn't have priced in the first place, right? There's a little bit of, again, volatility I had priced in terms of a gain potential. But this is obviously quite a bit more. And so when that happens, I like to go, okay, well, I'm going to take it here. And so probably right off the open, I will take profit on the rest of those. On tickers like Ford, for instance, and some of the travel things, I'm going to continue to let a lot of these move, and we're using our usual transition sort of process. Since we're very heavy on resistance coming up, trend lines, these sort of things allow us to really get in and out of the position and min-max what exactly is happening. Obviously, the more meme tickers are just kind of based on what everyone else is doing and speculation. And there's a lot of things there that are not going to be really timed well because we don't know what people are going to do, right? And so a lot of trades are going to be in a transition point probably today based on what we see in the market. If we reach all-time highs, I want to be careful I'm not switching things when that's happening. So for instance, if we hit all-time high at some point and then all of a sudden we want to start to take profit on things, it's almost completely opposite to what we should be doing. We should be capturing that extra demand that's coming in due to the sort of release of supply as we go to all-time high. So I want to be careful here that if that is the case, that I need to get all my shit done at open if we are going bid, because it makes, again, no sense to sell as we go into all-time high. It's almost silly to even think about. And so I want to make sure we're not overdoing things, right? I'm fine with pushing a lot of positions that I have that are already, up significantly from the pullback down here. One case here would be some of the larger tickers in ETFs, for instance, right? And so when we look at things like mega caps, right, these have been really just kind of slow compared to the rest of the market. Even though when we have things like Facebook that have put points on, this is not something that you have to go, well, now I need to take profit on it to get better contracts. No, I mean, if you bought all the pullbacks here, you can keep pushing these positions. These are not ones that have to be sort of dealt with. And again, it's because we do see the differences. Apple pulled back a little bit yesterday. It's going to go bid off that. We see Microsoft and Google getting that acquisition sort of bonus, that boost, right, comparatively. We see Amazon being very slow, like Apple, right, through here. These are not things that you ever really do anything. You just got to keep working through it, and it's going to take time on some of them. The other mega caps, even though they're sharp, are really in the same place in terms of transitions or anything like that. So we're going to be pushing almost everything over the weekend on the growth side, and sort of the other smaller tickers on the growth side that you've been a part of obviously are a little bit more sensitive, and so it comes down to a case by case basis. In terms of value, I mean, it's the most obvious thing. We're pushing long term. We don't really need to do anything. I don't think there's quite, if you're just value, there's literally nothing you have to do today. You might as well take the the long weekend early here because again, there's not really anything here, and there's nothing that's going to stop banks, for instance, right? We've already seen banks are going to continue. It looks like we're about to break through the high. So this sort of bull flag that we've seen, or really just this sort of slow consolidation, a bit of a stop, the sideways trading, which is sort of just trading sideways with the inflation numbers that we've had come out over the last couple weeks. It looks like we're about to break through that with the all-time high sort of spectrum there. All of this is going to just continue to trend. There's really nothing in terms of volatility that should cause it to do much of anything. It's really only on the energy side that we've seen a little bit of extra volatility. But when you look at the chart, and I say that, it's traded a lot more flat than any of the other sectors. So in terms of volatility, it's just maybe more of a removal of a trend sort of volatility and no movement intraday whatsoever, which we usually will get in the energy sector as it starts to recuperate or really benchmark itself to crude prices, for instance, right? And so everything looks very good on that side of things, and this allows, again, all long-term positions just get pushed. We continue on. There's not much that I think needs to be bought here today. I think it's important not to go into to anything today with FOMO or anything like that. If you missed some things this week or from the last couple weeks, today's probably not the day to be, going wild, especially if it's related to any of the meme stocks. I would say that the time is about up for being able to do anything there. Maybe by next week, we can start to consolidate some of these moves. Again, it's a question of what exactly is the longevity of some of these things. Some of the tickers are a little bit slower. Things like triple BY, BB, for instance, is not as far up. They might allow for some pullback buys, right? We saw this chart, for instance, yesterday, give a pullback buy. There's some things, but there's not much here. And so in terms of risk, it's very much still on the travel side for us. And I would, again, say that even here, though, if you haven't already taken this position and bought on the pullback or from the breakout from before, these already as well. I posted the CCL chart. These are kind of getting in a position where it's hard to go and take that position. There's nothing wrong with it, right? I'm still a buyer here on the travel side for the continued move, right? Just in terms of today and going into the long weekend, it's very hard to rationalize it, right? And so almost all of my mindset today is that I've got my portfolio and I've got my risk positions, and that's all I need. I don't need more. If I put more on today, it's going to be because I took profit on some other moves, right? And or because I've transitioned positions and I'm getting ready to enter a new position. A lot of those transitions, though, I will not be re-entering today, most likely. So if I take profit on something because it's put a big move on, then I'm most likely not going to be buying today, right? I don't see myself being here at close. I'm probably not going to stick around and try to trade the close or anything like that. I don't think there's really something that needs to be done. I think it can wait, right? And so I want to use that patience through a week that we've been very sort of active and things have been exciting, and that can cause you to be a little bit more volatile yourself. And I've used this line before that FOMO is a kind of volatility. It's important that these other positions and what we see in the short term do not overtake our strategy of the long term in sort of our view of the market, which is right now we're in a longer term sort of point of view and we're looking to trade on a longer term spectrum. If I get extra cash today, I do not want to go into a mode where I'm hungry for those short term gains and go, I'm going to make 100% over this weekend. Because those kind of trades right now are the ones that are getting blown up and losing the most. We've proven that our longer term trades are consistently gaining. I want to continue to get those gains. I know I'm not going to win the whole damn thing over one weekend. It's going to take time, right? Looking for the consistent gain over the whole year not for dumb luck over a weekend, right? That's probably not the best thing. Everyone's going to be at home over the weekend eating hot dogs, hamburgers, Americans doing their stupid, the usual thing over a holiday weekend. This is not going to be the one to make a miracle happen, right? And so I'm excited that we are fully positioned. We get to take advantage of anything that happens here towards the upside. This extra volatility from retail has really boosted our positions. That's great. That's why we were in, right? We preempted a lot of the move. That's why we're in. You can't do something now, right? You can't do something now, so we move on, go to the next thing, and so that's really that's really that. Let's go over to the other asset classes. Let's look at Bitcoin. Bitcoin really again continuing to take a move down. Now it's came up a bit from the low, if you want to call it that. It's looking pretty weak still. Now we've seen that it's continuing to get rejected by sort of a trend line up here. We sort of extended it. It is basically the same trend line we had from before. We just got a more clear sort of picture of the peak here. It's You can say it's consolidating at the low, which is good, right? But when have we ever seen Bitcoin really do that? We haven't really ever seen it do it like this, right? There's been times when we've consolidated, but that was consolidation to the upside, not to the downside. Consolidating to the downside means more downside, right? And so continuation consolidations usually are not good for the upside. And so no matter what you try to paint a picture for calling it healthy price action, which it is healthy price action, yeah, it's healthy for the downside. So uh, again, we are removed from the crypto space. We like crypto. We want to be a part of it. But right now is not the time to be, again, taking a look at it or doing anything. We can see that this is leading to extra demand in the equity market, which was a part of our sort of theory coming into it, was that as that's sold, that's going to be money that's going to go to equities. We've seen that. We have not seen the full brunt of it yet. We've seen a lot go to gold. There's still $1 trillion that came off this, right? And that's a lot of money. And there was already a lot of cash. And so, again, it's possible that it comes back here, but there's going to be, there needs to be a lot of changes in terms of what's happening. And again, now it's in a bad light compared to a good light from before. And so I think it's going to be a minute on Bitcoin for sure, but interesting to see where it is and how it's playing out. And, we'll keep an eye on it because, again, it does matter overall. Taking a look at gold, the exact opposite, continuing to consolidate, but again, off of an uptrend. Very different, right? There's a downtrend in a consolidation with Bitcoin. Gold is an uptrend in a consolidation. If you want to even call it a consolidation, more of a stop, right? And so gold looking very good to continue over the weekend. This has been a play that we've been a part of quite a bit. Again, I trade through the leverage ETFs. They continue to trend, continue to look good, and they're catching more bid because again, you have an outflow from crypto. So gold looking very good to continue. We'll see if this actually enters a bit of the super cycle that we saw in other commodities. Since again, it did downtrend for basically the last year. We will see. It's not clear. It's definitely in the short term been very bullish, right? Looking at the oil side, right? Now, energy, we pulled back a little bit. We knew that there would be some volatility swings based on just, again, every time we get any reports on consumption or we get some supply things from OPEC, prices change a little bit more volatile. We see that oil is coming up here. We're about to break out of the local high. Now, this is it's a little wonky looking, and I'm not sure exactly if you're not going to continue this. You're going to get onto a slower trend, most likely, the usual trend. It is just a little, ominous looking. And so, in terms of its factor on energy, there's no, again, energy is very slow long term sort of look right now. And so, this still, though, looks very bullish. And so, when we take the case of using oil as a bit of that economic recovery sort of idea and using the extra demand from people going back to this norm or whatever, a lot of times we can just look at the oil prices and see that and see how those things are happening. these line up very well with the economic numbers we just saw from this week, the week before. So the inflation expectations still all working, and it is important that we do see these futures continue to trade that way, because otherwise we start to have this disconnection between the speculation on whether those things continue and whether or not the actual economic data is proving that this is happening. These things are in line. Inflation's up, economics, the numbers are up on the economy, and equities, futures are all trading to the upside, betting that it will continue. This is one of those weird situations that when you start to think about it, due to the fact that the demand is basically peaked on oil, and now we're going to be converting, just like oil companies, you get this very strange dynamic where the first assumption is to think that oil prices will go down. That is almost the exact opposite if you think about it in sort of the true economic sense of how those things would interact. That supply is going to be cut. That is going to cause prices to go up, right? The demand is not really going to change quickly, right? It's the supply that will change quicker. Demand, it's going to remain the same until we completely turn over, right? Until we turn over to some sort of very renewable heavy percentage. Those things are going to take a very long time. We've already proven it. It's going to take fucking forever. We're talking about right now, right? We're talking about in the short term. But the supply will change. They'll continue to they've cut supply significantly, right? And we've seen this. There's times when it will go back on, and we have countries like Russia taking advantage of of what's going on, and they continue to sell more, trying to take advantage of the price because obviously Russia, that's basically all they've got for oil or for their economy. And so I think that we're in a pretty good spot for this to continue. So we're continuing energy as a benchmark with banks. Banks again being really the most obvious sort of part of the inflation trade. Again, it's the inflation trade, not the rebound trade. You can only rebound once. Inflation can continue. It's really important that we don't do that. We're like, well, yeah, it'll keep rebounding. We basically did that, right? There's obviously more to open up and everything else like travel, but it is important that we understand that it's inflation. And what does inflation exactly mean, right? Okay, prices rising, all right, and cost of goods for the everyday person is increasing. It causes some different problems. We've seen consumer spending's up a lot. Well, what if prices are going up, right? And so these dynamics start to come in. There's obviously the whole idea of, well, what do we do with inflation? How does it affect equities? Well, it's going to discount growth, right? We see yields rising, right? Everyone's selling bonds because, again, owning treasuries right now, it locks you into a rate which at this point is going to be less than the actual inflation, which means you have a negative rate. And so you're not actually gaining. So no one wants to sit on bonds. Everyone wants something that will appreciate with inflation. Now, I had lunch 2 days ago with some buddies of mine that still work at institution, and the entire lingo that they used to me, now they're like junior bankers, so it's fine. Their whole lingo was, well, how do we hedge inflation? How do we trade through inflation? How do we hedge our positions against inflation causing a problem in the equity market, right? And that's really not the way to look at it, in my view. We should not be going, well, how do we hedge inflation? That's not the right question. The right question is, how do we trade with inflation? How do I want to take advantage of inflation? How do we take advantage of inflation? Instead of hedging it, we buy it. We go for it, right? And we've done that by going heavy on banks, heavy in energy, heavy on these sectors that are slower, that we think about when we think about growth. Growth is going to grow in the future, right? Their earnings will grow in the future. What are the tickers that are going to take advantage of the inflation rate now, right? As others are worried, those are the tickers that are going to receive that growth in this moment, right? At this very moment leading up to the next numbers, those tickers will be gaining as basically growth tickers would. And we've seen this, right? We've seen a lot of these tickers. What will happen is that from all of this spending that's going on, they get direct inflow from that. They get directly affected. It's right onto their balance sheet, basically, right? And we've seen that. And we've tried to utilize that sort of rationale for a lot of different sectors. Things like semiconductors, right? Massive supply shortage. Semiconductors are basically growth tickers, and they would get hurt by inflation. You would have the cost of like GPUs, CPUs going up by fucking God knows what if there's inflation, right? Because then the cost of the minerals, the cost of every bit and piece is going up with inflation. Well, if we look at it instead, again, as that those prices are increasing, and this is going to be a direct benefit of this moment, and as governments, including spending, it's the same thing as looking at things like in infrastructure. We've got $6 trillion coming out in spending plans by Biden in the Dems right now. That's right now. That money's going to, when those go through, and through that, again, the speculation of it happening, those benefit things right now in this moment as things do get hot. The way inflation works, as we've seen it, is we had very low inflation, and then as soon as that money came in, we're seeing it above 3.2%, these type of things. The reason why the Fed keeps saying it's transitory, again, transitory being that it's happening now, it's going to go away, that's because it is happening right now at a big sort of peak level, just like consumers are not going to be spending the same amount they are now. How do we take advantage of it? By buying that shit right now, right? We may need to sell it at some point sooner than later, but by buying it now, we take advantage of that moment because it's going to happen in that very quick amount of time, right? There'll be a little bit of a spike there, as we've seen. Again, spike over, we're saying like a year here. And so you don't want to hedge it because a hedge, again, you're only putting a limited amount of resources against it. You want to be putting all your resources with it right now because there's no doubt that it's happening. There is no way to go, oh, there's no inflation. The economy's not hot. Bet on it now, take advantage of it, and then we'll transition to the next thing. Now, the market has done this, right? We've rotated to value. We did it very quickly. And the thing is, though, is that a lot of it still is not, it's not taking advantage of it in the same way that we are trying to take advantage of it, right? And that's why it's important that we continue to press with a lot of these things and we don't sort of relent. Every time there's a pullback, we buy it. That's trading with inflation. Why? Because inflation is going to cause those prices to appreciate no matter what, basically, right? And so you can use this bias to be very bullish in every single situation. Every time banks pulled back, we buy it very aggressively, right? And guess what? That pays off. These things are right now gaining because of it. It's not like some sort of, Swazi like, oh, well, I mean, maybe it'll be like a good hedge against inflation to bet on banks here. No, it's fucking good right now. That's why banks are doing well, right? And so when we look at every single facet of this, right, it's really important that when we start to read more and more about how there's rotation trades and, okay, well, how do we hedge inflation? Is gold or Bitcoin a good hedge? Maybe houses? Like, they'll say like real estate's a good hedge. Like, have you seen the housing market? Have you seen Bitcoin? Gold has just finally came up. Just fucking trade it. Just go with it. Why do you have to hedge it? Why do you have to be against it? Why is it a bad thing? Why don't we just fucking take advantage of it, right? If a bank's being robbed, right, and the safe's open, I mean, join them, I guess. I don't know. That's literally what it feels like to me. I think that's a terrible analogy, but that's literally what it feels like is that there's just money on the table. All you have to do is put it there, and it's going to appreciate because of inflation. It's pretty no-brainer to me. Now, big institutions can't do that, really, besides their actual active trading floors, because, again, we can get into a trade and get out of it. Obviously, if you're a big institution, you can't go throw $100 billion at something and then get out of it tomorrow. And so that's a lot of the reason why they're trying to look at it as a blip as opposed to just sort of a trend. I'm looking at it more as a trend and I'm going to swing it. And so, again, those are different things. But if things are reported that way, those are different things. We're not a fucking institution. We're not we're not in that situation. So, again, it's really important that we continue that bias of, okay, every time it pulls back, I'm going to fucking buy it because it's going to go up. It's going to go up because the money supply continues to increase. The Fed keeps buying. Interest rates are at zero. The federal government is spending more money than in fucking human history again. Again. right? We've how many trillions of dollars have we done the last year? And now we're about to do another 6 trillion. This shit is gonna cause the hottest fucking when you talk about a gold rush or sort of like a golden time period. Like this is as close as you're ever gonna get. There is no there is nothing close. And then the negative reaction to that is that, well, look at the 60s of inflation. That was a long fucking time ago. That was 80 years ago, right? Fucking for forever ago. Not 80 years ago, but jokingly, it was a fucking lifetime ago, right? And so the institutions that we have now and the tools that the Fed have and the way the government can sort of protect things, we're in a very different place than when inflation took off before. It's not even close, and you can't even use it. There's actually no way to use it because of how things have changed. Uh, you can use technology as an example, but it's really in the way in which we understand things, right? That's how everything works. Is through history we continue to develop and get better and understand things a little bit better. Those things that hurt us before, we've learned from, and not in the sense that greed or something like that. Everyone's still greedy, but we understand the risks a little differently, and you're not going to go get shot in the face in the same way if you know something's shooting that way, right? You're not going to keep walking in the line of fire if you know it's there, and that's exactly the difference between then and now. Is we're not going to go into that situation. The Federal Reserve doesn't keep saying it's transitory and continue to spend, and then the government doesn't continue to spend because they're fucking ignorant. It's that we understand the risks and sort of the model a little bit better now, right? And so it's important that we as well have trust in these institutions. And I don't mean like banks or anything, but as in the institution itself, the model, because guess what? They'll fucking do anything it takes anyway. Have you seen what happened in 2008? They fucking bailed everything out, started the biggest spending program in human history then, and look what we're doing now. Now we're doing it for fun. We started QE from the financial crisis. Now we just do it because it's a fucking fun thing to do. And I mean fun as in because we can. We literally just because we can. Why do we give people checks? Because we can. Why do we give businesses just fucking free loans? Because we can. Why not? Why not? Right? Money supply has tripled in over the last year. Why? Because we fucking can. We can just keep printing. That's it. There is no again, that has happened. It already happened. We're seeing the rewards from that, and we're seeing the results in really every single market, and you're going to continue to see it in the equity market. People have more money than ever. We went through a tough time with COVID, but people still have more money than ever. There's some people that are far worse, but there is still a lot more. There's a lot more. Put it this way: the Western world gained a lot more as the rest of the world lost, right? And that is money that's willing to go into the market. It's going to continue to do so, right? And it's going to continue to be spent. Amazon will keep growing. Apple will keep growing, right? These things are they're not questions or what ifs, right? Is Apple going to keep growing? I don't know. Maybe they'll just stop making iPhones, right? Maybe Amazon will just stop fucking selling things, right? Maybe Google will just say, you know what, fuck it. We don't need a search engine, right? Those things will continue, right? Cars will keep being bought. Houses will keep being bought. Those things won't change, right? And so again, don't go against it. Go with it. That's what we're doing. See you later, AMC. An extra 20%er. We'll see what we get. We'll see how bid we are, and if it's very low volume, then I'll say let's get the fuck out of here because nice long weekend. Not really sure what I'm doing yet. I think I'm gonna go see the fam. Eat some hot dogs. Drink a beer. Let's see. The meme stocks are definitely continuing having some fun. I would love to see them just fucking go more. I would love to see AMC just go forever, but I'm out of here. Let's see how long it takes here. There it goes. I'm out. 32.94. 32.94. Done. Okay. Oh, by the way, it just went up another 5% after I sold. See? Damn. Really wish I was still in. God damn it. It's still going up. I really wish I was still in. I better buy more. Says everyone ever. Says everyone ever. Guys, maybe we should get back in. Oh no, it's gonna go to 100. We should get back in. Oh, fuck, dude. Oh, it's still going. Oh no. Oh no. But guess what, guys? My contracts are only going up 1-to-1, so my contract is now only up another 5%. Doesn't fucking matter. It's literally a waste of time. Take the money. If you have a delta of 1 and your contracts are going up 1-to-1 with the shares, then just fucking take it. There's literally, you can just, if you really want to be in, just buy new contracts. I'm not a fucking psycho though. I'm not gonna buy contracts here. Good luck on that one, boys. Anybody that's gonna go jump in there, good luck. BB, by the way, though, we're about to get that 1068. See what that does. All right, let's take a look. Nasdaq remaining 40 basis points higher. The old Dow 50, 0.5%. Very good though. Looks very good. Looks like we might go bid from here. It's a little bit less volume overall. Mega caps are obviously the most important thing today if you want to see all-time highs. Apple has not gone bid yet. You need to see Apple go bid from its sort of not really a loss, but yeah, the red day yesterday. You want to see this go bid at least 0.5% to go see the S&P go up 0.5% and go to all-time high. The rest all basically doing the same thing. Google is up overall, but still selling a little bit. Facebook inside day from the big day yesterday. Amazon is a little bit a little bit slow. We'll see how this goes. Sting candle there forming. We'll see. We don't really see much here. Again, we opened almost 0.5% higher, so you have a little bit of selling there. It's barely like 10 basis points so far. Overall, you still have continued moves on those tickers that were a little bit slower, so things like triple BY up 5% here. I don't really see much else. We do have quite a bit of tickers head to the upside, but nothing that really stands out that much. UMC 2% all pre-market though. You want to take a little old Ford chart. We're up 0.5%, continuing. Again, we're working through a little bit of supply here with a trend line. We're sort of there. We're in that area. We'll see how that sort of plays out up here. Again, this is a question of how you play it for yourself. I transitioned yesterday at open. I talked about, so I have got fresh blood in there. We'll see how that continues. BA going bid off of its opening lower, take profit. That's very nice. Again, it's always a question when you get a little bit of rejection there at resistance, whether or not this is going to be sort of a daily candle that opens on the resistance, then sells. This is a very different situation. You got bonked, open lower, going bid, very bullish. Definitely like that look. Banks hanging out. We did not get the breakthrough of the high just yet. Looks like we might be heading that way. In energy in a very similar spot here, sitting in supply. Looks like a kind of a slow open. Looks like we're about to. Looks like we're waiting for the old 10 o'clocker. I think anyone looking to get involved in the market for more orders today is probably waiting for retail to do their buying and then they can go in, which is how you utilize game theory a little better, is you let them make the first move and then you do something, because then they can't do the same thing again. They're gonna have to react to you. AMC 37. Oofa. Big day. Big day. All right, we've only missed 10% of it. Let's see what we got cooking. STC going bid. There you go, boys. You want a big boy? Right there. Go smile with STC. That's going to go to $10 today, isn't it? There you go. Go put your AMC money on this one. Go get 20% from STC real quick. No, really, though. Yeah. All right, let's see what else we have. Anything peeking its head? We have a couple things peeking its head. Couple things peeking out. Rad going. There you go. Go pick up the ratter. Go pick up the rat. That's probably going to 20. You guys got a couple. You got a couple meme stocks out there. So Rad 20 looks pretty good. We on PayPal. Where is that? I just saw it. There it is. PayPal looks like we're gonna hit the resistance probably today. A lot of these are waiting for all-time high and need it. Some of these growth tickers on the tech side. Solar, you know, it's close. Close. Again, we're really fucking just confused on clean energy and when it wants to get bid or not. The question of, again, timing. It's just a little too far out. It is catching bid and trading with the average, so that's a good sign. It is just a little too far out priced. Half the problem. Anything else interesting? Not really. Not really. PB continues. Went through 1068. It's at 11. Boom. Space continues, which is just oof. That thing is gone. You might as well go throw this pattern back on over here because that's exactly what's happening. I mean, extend this thing and there you go. Boom. That was the break. See ya. That's just again very retail heavy and also just a return to really in here. You just remove all those candles down there and it's now down and it's on this path again. I mean, that's really quite the move and impressive in my view. I don't think none of that was priced at all. I mean, even in my own thinking, not that it couldn't continue to move, was just that the pricing was just a return to the norm. Now it's just fucking continue to break with retail buying and buying and buying. Looks very good. Now it does. Now it does. Did not look good before. Again, you're not going to get them all. Definitely did not get that one. Definitely not. We have a lot of shit coming. This is all-time high easily today. Easily. Calling it right now. Easily. Easily. Mega caps are a little slow, but I think they will pick up. I think they will pick up. Because everything else looks very hot. Now, not so much on everything large, actually. So, at least through the smalls. At least through the smaller side, absolutely. But I would say that with everything moving so quickly, Tim makes a very nice start today. What's that last from yesterday? I would say that it's all-time high. It's got the all-time high energy, at least. That's for sure. Now, again, retail. Difficult to tell. But unless institutions decide to sell into the retail buying today, but it's just not equal. Again, it's not a large enough portion of the overall monetary value that you can sell much to people buying right now, so it's hard to see that happening. I guess it's possible. Entirely possible. But I think you go bid. I think you go bid. Going. Nice day. UMC now over 2. So if we look at the overall semis, AMD coming off the low, which is beautiful, which is what we wanted. We've been sitting here for fucking ages. That 2%, it's now in the middle of nowhere. I talked about like all this week, price coming up between these levels very quickly, right? Very quickly. I've said that just about every chart that has an open range, but very big open range. Nvidia, right, is our most bullish of them, breaking out of this out of this brief stop. We've been talking about the stop a little bit, how we're looking to continue, and how also this chart is just continuing the same sharp sort of trend here, and that you didn't sell anything, you held, which is very bullish. And so we are getting the semi moves, which again have taken a little bit longer, but they are coming through, and you can see it across all of them. So definitely nice to see, and we'll see how much of it is retail buying AMD, for instance, because AMD is a little bit, a little bit slower, a little bit more down in the dumps. We'll see. But not too shabby. Myrna does continue. It's about to reach to the high. I think that answers the fucking question, doesn't it? Now we can go again. The big thing here is if you break this high, just to put it back into the big idea thing, if you break this high, then it means that there is pricing that's going beyond COVID on the big pharmaceuticals. Not big pharmaceuticals, but through the uh, bio companies that sprung up during COVID. If these are being priced beyond, it's because they're being priced that the government is going to be doing some sort of development in some sort of, spending program for, preemptive pandemic sort of measures through uh, RNA or something, right? R&D, sorry. RNA. Very bullish on Myrna. That's great. Very nice. Whoa, boys, what happened over here? Whoa, it's below where we sold. Whoa. Whoa. Did we get perfect timing or what? Whoa. What's going on over there? Whoa, guys, gotta be careful. Who just bought at the top? Who bought at 36? 36 and a half. Oh, Jesus, it looks like we got out just at the right time, boys. Oh, Jesus. Oh, no. Oh, and the BBYs keep going. Yeah, we're gonna be waiting until 10 o'clock, boys, for sure. Everyone's like, all right, let's wait. Just give it a minute. Don't worry, AMC will jump back up. It'll go to 50. PDD is coming off the low, which is nice. And the China trade is, who knows? Numbers were good. We have seen some of the numbers. They look good. If you look at the Hang Seng, nice day here. You look at JD, for instance, right? Coming off in a similar way. Baba, very similar. At the low again, but it's got that sort of bearish trend look. Still waiting. PDD had that very large sell from earnings. China is still up in the air. Questions whether or not. Looking at pot stocks, they continue, but it looks basically just like every growth ticker. So not much to input there. Much going on there. Let's see. GE rejected rate on the two converging supply trend lines. So true resistance right there. Makes sense. We looked at it. Found these trend lines through the macro. Right there. There you go. Wow. Hmm. Makes you think. Let's see. Everything else hanging on, sitting, waiting. Everything large is basically just waiting for some of this opening volatility to go away, it looks. We did that a little bit yesterday. Not really yesterday. I guess the day before. It was really the day before we did that. We had low volume, waiting. We just started getting bought by retail. Yeah, everything looks the same. Kind of boring. Put it on the 5-minute. Oh, yeah, 14 to 10. Let's see. Put us at just put in the put it in the all-time high. Put me in the all-time high. Get me on my trend. Already. What's the actual number again? 422.82 is the high wick. The close though, this was the open. 422.5 is the highest open or close price. Are we on our way? Looks like we're on our way, folks. Chug it, chug, chug, chug. Waiting on the big boys here. Here you go. So pretty standard. Pretty standard there. Oh yeah, we're heading there. We're on the way. We are on the way. Small caps coming back down to close from yesterday. Now swinging back up. Don't know what to make of this yet still, but definitely helps the Dow. Dirham with the break out of the range. But I don't think we should even talk about it. So we're not going to talk about it because we don't know. And we should just leave it. Dirham has been dog shit forever. Besides when it gapped up before. But that was it. We'll see if it holds it. We'll see. We will see. That will be a to be continued story. All right, just be 10 o'clock already. Come on. 10 minutes. I don't got all day. Wrap is 6%. Oofa. Z is, it's trading around 2% today. I still don't know what to make of that chart. I'd like to take this, but it's hard. It's hard to take that trade there. Don't think you can take it. That's like the issue here. Don't think you can take that trade there still. You'd have to really be in it for the long haul, and I don't think I can commit. I'm going to cheat on Z. Sorry. I'll cheat on you, Z. Some of the break even and sell side, there's not really anything opportune. Really anything you can do there. Not really. We're basically right now just hanging out with retail until they get done and they get bored. Waiting for them to get bored, basically. Now and then you get the big boys in here. We can finally do some things of our own. Travel looks very good. TCOM is still sitting at this 41. I mean, is it gonna go through? I mean, I don't know. We've been sitting here for however long, since February. Maybe one day. Maybe one day. Unclear. Overall, sector is very bullish. BB, look pretty good. Obviously, if you were wondering, BlackBerry introduced their new BlackBerry phone from 1999, refurbished. Or it's literally just the same phone from 1999 that you can buy with the little buttons. Just they call it the retro. Go ahead, buy it. Basically, every retail chart looking the exact same. Which is kind of weird. Oh, goodness. Edit's about to put a fuck ton of points on here. Go back to our weekly. There you go. Edit is through the level. And it's going to say sayonara. Hasn't done much. Continued on the downtrend for a little bit. Looked like it through the level there. Not much yet. It's still sitting on the supply, but it looks like that might go. Keep our eye on that. SDC does continue. Now 5%, 5.5%. EDD, I think it might continue. Oh goodness, yep, bios everywhere. Bios everywhere. Bios everywhere. XBI, our biotech ETF. Not that many points yet today. 2%. But again, probably the ETF is the easiest thing to use if you're trying to trade those right now. Okay. It's time. All right, are we going to get a big fucking green candle right here or a big red one? That's the question. Doesn't matter for the long term, but it matters for today. Are we going instant to all-time high or instant to fucking the ground? It doesn't matter what happens with the retail frenzy right now for the overall. Literally, those all could go to zero and it wouldn't do anything. So, and those don't matter. Those do not matter. This is all about. We've had some we've seen this. You get volatility from retail trading in the open. Institutions digest it. Wait till about 10 o'clock. 10 o'clock orders start to go through. So, yeah, same thing every day. But how involved are they is the question. And is it just them? Possibly, but I doubt it. I think anyone's that coordinated right now. Or anyone's really cares that much. A little too much going on with the economy, inflation, trade, and all of that. and it's going into the week or into the long weekend. Again, I do expect us to be lower volume overall, but I would say that this open will have a little bit higher volume overall than the average. So, it won't equalize. We'll still have less volume today compared to yesterday, for instance, but the open should have quite a bit of volume still here. I know we're already almost 30 minutes in, but I think 10 o'clock here we'll start to get the orders come through on the big order side. But then they'll die down. Most traders, for instance, will be out by lunch easily. Um, they will not be trading close, and so those orders will just be automated. So they will not be they will not be big orders or anything like that. They'll just be the usual periodics. And so I'd expect anything that's going to be attacked or stabbed right now, like for us to go to all-time high requires a human sort of presence. Not just computers dinking around throwing orders on. That's not what causes things to go to all-time high. You need some human intervention. Put this trade on for me. Buy me some of that. Give me some of the man. Give me that going into the weekend. I'm eating a hot dog, Chris. Buy me some apple. I'm eating a fucking orange right now, but buy me some apple. Those big institution owners. Put me there. Put me in the all time. Oh, we have the Trading View drawing thing as well today. What time is that? What time do you guys do this, huh? On here? I don't see it yet. See if we win. How silly would it be if I win? Love that. Put my laptop right here. Put my laptop next to my two fucking giant screens for no reason. Everyone knows that you're a better trader if you trade with multiple laptops. It's the only way. And with your phone. Or phones. What about a new 1999 BlackBerry? Honestly, at this point, with AMC doing so well, you might as well set up a trading floor at AMC in the theater. Use the screen as like, you know how many charts you could put on a movie screen? I'm gonna fucking invest in one of those. It's gonna look like fucking Westgate in my office or my apartment. Big movie theater projector. Maybe I can shine a projector out my window at the building next to me and put all the charts on there. Wonder if that's illegal. Here we go. Come on, 10 o'clock bump. Do the bump. Just give me the all-time high right here. I want all-time high for just to melt, and I want to just go out right now. I want to leave right now. Go all-time high, and I'm going to go out the door right now. Come on. We're barely moving. We're moving at like 1 basis point per minute. I think everyone already left, to be honest with you. Come on. Fucking slow. Just sell all the retail shit and throw it into the big boys. That's what we need. Bored with some selling there. The old take profit coming through. 75 basis points so far. In terms of the position I just entered here, I'll just get, again, I took profit, bought new contracts. I'm obviously up from that point. Can't really in there. Well, 3.5 so far to where we are. Not touching that, not doing anything. That's the point. After a 7% day, usually you should get some take profit. It doesn't even look like it's continuing, which is everyone's buying still. Okay. Something like here. What do we have on some of this? Idea is break even. Nice. What is the number? What is the actual number for? Jesus, we put so many points on there on that last rally. Crazy. Nope. Nope, that's not what I want. I want this. Europe looking very good. In terms of commodities, looks like commodities traders are already in the long weekend. They did not even come to work. Let's see. What exactly going on? What a stupid chart. The spot fixes. Jesus. If you just saw on the 2-year yield there, you can see how wide those spreads are day to day over this week. That's again this process that's happening right now of converting equity volatility into bond volatility. And that's again part of the inflation trade itself is pushing volatility to the bond market because bonds are being sold. Yet the Fed is still providing so much liquidity there. And so again, it's causing this sort of vacuum of volatility to the bond market, which we do not see in the equity market, yet is there. Yet it is there. And so it's important that we still know that we are in some intense volatility right now that just is not being seen day to day, which is how the equity market tracks volatility. It's day to day, those sort of volatility metrics will change. It's really in the in the equity market right now, sort of a week to week thing, which is why that number really doesn't exist, but it is there week to week. We have a lot of volatility. Important to remember that this is sort of where we are, and we are trading on this longer term. And so if you do convert it to a weekly standpoint and you look week to week, we are in a more volatile spot. And so that again can lead to a lot of points very quickly, or the opposite. But it does explain why we do not see rising volatility when we have this madness going on, right? Why is there not volatility? Because it's been converted to the fucking bond volatility. This is the best way to look at it is when you look at implied volatility. This is expected. Why? I don't know. Just it's already expected. All right, we're very slow. We did not get the 10 o'clock bump. Not yet, anyways. It would have been more value centric, mega cap centric. Now, I mean, it sort of we are getting the orders through on mega caps, but it's not equalizing to the rest. Microsoft came down. See. It looks like everyone's on fucking vacation already. What it honestly looks like. What's the weather out? Pretty nice out there. And by nice, I mean not a reason to be outside. It's fucking raining, so. No one's out and about. Back to work. He does keep climbing. If anyone saw, I can't remember what was the number. Let me go back. That article I posted about Z. Oh yeah, in April, 47% of U.S. homes were on the market for less than a week before going pending. More than 3/4 were on the market less than a month. So half of U.S. homes were on the market for less than a week before someone already bought. It's only taken a week to put your house on the market for it to get fucking sold. For orders to come through. This is a great move by Z. Great move. That's pretty. So many of these look like they're just going to those levels above. We wait. Wait and see. Nothing to be done today, though. Trading flat like every other day this week. All pre-market action. And then retail tickers doing their thing. EVs 20%. Triple BY's 10%. AMC is just at 25 now. TLTR is now 8%. Base is still at 10%. STC is now 6. RAD is now over 3. TGC is 5. Really nothing interesting. These are dying down. The volume dying down on the retail meme stocks. AL making an interesting move. Feel those travel trades do into the weekend. Getting anything thrown into value here? Not yet. What is this here to here? That's 9 basis points. Holy shit. I thought that was more. Well, we have support literally right on us. So I thought that was a lot more. Oh, it's 5-minute candles. Jesus. There you go. It looks like yesterday. Boys. Tell you what. Be a long weekend for sure. For Bitcoin. Remember, this is your last time to buy the Bitcoin dip until the next Bitcoin dip. Dip? Dip? Where's the next one? Dip? BB reached both my targets in the span of about 5 minutes, both ways. BBY reached my target in the span of about 5 minutes as well. SDC now 6% or so. Getting there. Where are we? Doing well. Funny how different those look. Well, well, well. Nothing's moving. Somebody do something. Move. Anything. All right, when is this trading view? Let's see. When do I win? When do I win? Give me my winnings. I can feel it. I'm gonna be the winner. Where is it? That. Oh, there you go. That doji candle right there basically tells you everything you need to know about today. Fucking everyone left already. Retail, we had fun in the first 2 seconds of the day. Everyone's tired. No volume. Everyone's hanging out. Who is here? Looks like it's going to be pretty flat until the possibility of a melt up all-time high lunch, but I do think you need that human touch. The people touch. AMC down and dumpy. Oh, doesn't it feel good? We're now at 2.5. See how close we get to. Again, I'm on the level. Be very curious to see how we do. Again, we did 7% yesterday, so very much in line. Very much in line with things. If we get the should get the bounce here. We'll see how close this gets to stopping me out on my transition trade. Be very curious to see. Because it is different when you're at this high. No one really knows how to price up here. And this is where I've talked about volatility is very strange up here. Where you're in the midst of higher volatility already. So you can't really price. You can price more volatility, but it's a lot more about the delta exponentials. And then the gamma coming out of already a sharp rally. That's where having transitioned, you actually are at the peak of your of your gamma, and so you're in a position that it does cause interesting things to happen when you have a sharp downturn into your position, and then a sharp upturn. See, like a nice turn right there, actually. Holy, little whipper. That's it. These candles are so whacked. That's a 0.5% right there. Hmm. Wow. I'm losing my eyesight. How the hell was that 0.5%? What? I think I might literally be blind. How is that 0.5%? Hmm. Okay. Well, nice little whip there. What the fuck? What? What's this? That's 0. Makes more sense. Hmm. Interesting. Very interesting. Well, looks like no one wants to let Ford go down, so that's nice. Tesla, on the other hand, I think, I don't know, tough spot there. Tough spot. Everything put points on a close yesterday, but a lot of those are being returned. What are we doing on this AMD thing? Yeah, I think we have plenty here, which is very nice. Semiconductors, we are behind. We have room to catch. How many points? Everything is right underneath that resistance. It's just waiting, waiting to peek its head through. Now who it's gonna be? Hmm. What is this for? Considered as a weekly gain this week? This was, where is it? Oh, there it is. Almost a percent and a half on the week in total. Percent and a half week. Hmm. But from here, 4. So the potential was high, but the actual a little over 1. That's from last week. They doing the tumble? Are they doing the tumble? I mean, there's only so many people that can buy. Only so much money to buy. So when do we get back in is the question. When do we get back in? If it drops 100%, I'll buy. I love watching this shit live. Just thinking about the mentality of people right now. They're going, "Oh no, this will be fine. This is good right here. Oh, it'll bounce right here. Right here it'll bounce. See? Oh yeah, see it's going up. Oh, I'm gonna hold. I'm gonna hold. Oh shit, I gotta sell. I gotta sell. Oh no. I think it'll hold 27 because 27 is a whole number. 27 is a cool odd number. My favorite number. I think it'll bounce right. Oh yeah, it's going up. Okay, I can hold it now. It's not bad. Not bad. Just thinking about that, how little anything matters. Oh, I can't even imagine the 1 minuters. Could you imagine the 1 minute candle people right now on some of these charts? Like, what are you even looking at? It was more volume. It was more volume. What we kind of talked about yesterday was that it peaked in the media. You're going to get that reaction. But that's exactly why I sold right at the open. Is that you're going to reach that peak of interest. Bouncing on support. Now, this is only 9 basis points. This whole thing here, so there's barely any movement. And that's where I think I got a little confused on the forward chart. I was like, that's 0.5%. There's only 9 basis points. Not even 0.1%. We're up 20 basis points on the S&P. Looking pretty good still. Slow. Just everyone's on vacation, it looks. Dow's up about 0.25%. Sitting on support as well. NASDAQ doing something a little similar. The levels are a little different, but okay. We'll see. Should be holding here. Shouldn't be a problem. Since there's not much volume, the levels should almost always hold. That's kind of you need more volume than usual to break through a level. So this 420 here should be no problem. If it goes down, then okay, well, things get interesting. And it can be due to retail selling, but they've already done that. They already they already dicked around, so they can't really move anything else anymore, I would say. Anything else is just due to lack of volume, and if supports get broken or resistances get broken in sort of a non-break sort of way, it's just due to low volume and those orders are not being there. Can happen. I see us going to the upside still. We're up. We're still green on the day by quite a bit, and we've been trading sideways every single day. Looks exactly like how yesterday and everything's played out. On the exact same spread. We just did a lot quicker yesterday. But hey, those retail tickers are taking profit from the open a little bit, but they're still up significantly on the day, and that's something that can't be ignored. So even though I said like I took profit at open on AMC and now it's down from there, it's still up 8% on the day. So people that held from yesterday, they're still holding, they're still up 8%. So some of those things, it's important to remember that as well. It's really easy to discount some of it. It's like, oh, it's down, but it's up on the day, just like the market's up on the day, down from the open. Those things they can cause some, like, maybe nothing's actually happening. You ever seen a whip? and we haven't really lost any points, so that's the weird part. Hey, give them a chance. Give them chances. I think the long weekend might take some of the air out of some of the retail trades, though. I think people will get a little. I think Bitcoin's gonna have a crazy weekend, so I think that might take some of the energy out of people that would usually be a little aggressive, like they have been on equities this week. I think if Bitcoin plunges, I think you're gonna get some weird shit going on over there. Give me one sec, guys. Okay. Oh, bounce on the support. And we go back. And we trade flat. No surprises. No big moves coming from anything else. Nothing to the downside that's really that we can really take. Most things are making anything that put a ton of points on yesterday is making the usual take profit day in response halfway through. Everything is really just waiting for the all-time high dance to get any more bid, it looks, because I don't think demand's coming in unless we are actually rising the average up there and causing that sort of supply shift. I don't see it happening very soon here, but definitely feels like a holiday weekend now that we're out of the open. Who's gonna come in? What's it gonna take? Okay, I am reading the dumbest things right now. Jesus. Stop. I'm addicted to reading shitty articles. Opinion pieces are terrible. Don't do it to yourself, folks. Don't do it. Now what's funny is that so Amazon just acquired MGM, right? So now they have this big media presence. They already did with, you know, Prime and stuff like that with their own media, but now they own MGM and they're getting into pharmacies. So we've already, Amazon's a tech company, so Amazon's competition are other tech companies and other online retail stores and transportation, all these things, right? Like there's 100 different things that they already were competing in, right? We already knew it was a conglomerate competing against all kinds of regular grocery stores and shit. You know who's Amazon's competition now? Disney and CVS. Amazon's competition now is Disney and CVS. Those things should not be in the same sentence. Imagine if Disney and CVS were in competition with each other. That wouldn't make any fucking sense. Well, Amazon is. Spooky. What do we do about it, folks? We gonna let the corporations take over? I'm all for it. Makes life easy. I don't care. I don't care. Yep. Basically everything that's been moving so far today is fucking retail. Almost nothing else has moved. That's so funny. Literally nothing else has moved. Nothing at all. Interesting. What are these? Are these live IV numbers? Well, nice flat day. Holiday weekend. Holiday weekend. Holy. I think it's almost that time, folks. Almost that time. How early into a training day can you call it the weekend? Is the question. And what do we even do with the free time? Either way, it's a nice day so far. We are up across the entire market, so you know, not 0.5%, but almost there, close to it, and right underneath all-time high. Retail has had their fun. Still, all the retail tickers are up a ton, even though they're sort of hanging out from the open down a little bit. But big pre-market action. S&P is right on the cusp of all-time high. There's just no volume. No one is even here. It seems like. It seems like it's like all the adults left and the kids are left out to play. That's adults are inside hanging out, kids are outside playing with things like AMC, BB, Triple BYs, ELTRs, spaces, right? All the fun ones, and then everything else is almost not moved. So it doesn't look like much else gonna happen. I can't really. If something happened, it would be very random, and it would most likely be from a melt up into all time high, and then all of a sudden all the jets get cooked on. All of us have to go open our phones up if I'm out. But there's really nothing here. It looks like it's just gonna be this is the start of the weekend, uh, and everyone left early for some vacation. So I think I'm about to do the damn same. Uh, I don't think there's anything else to do here. I don't think there's anything to watch. Anything from here is just kind of be a little bit of inaccuracy, right? Lower volume means less accuracy. I'm all about accuracy. Otherwise, what am I watching price for, right? If it's not accurate. And then it just comes down to, well, what do you think? We already know what we think. We don't need to do anything else, right? If you're going into the weekend, you don't know what you think about the market, then that's rough. So, you know what? Let's enjoy the long weekend. It's been a really fun week. It's been a really fun week. And a lot of exciting trades, a lot of money made, a lot of cool things going on with retail coming back. I'm guessing they're here to stay for a little longer. As we see, most of the tickers are still up on the day, have not taken profit. And so everything looks to still be going well with their trades. And um, with crypto where it is, it looks like crypto is going to be in for quite the weekend. Those of you that are trading in that space are still in there. Best of luck, because you're going to need it, because that looks like a nightmare and looks like hell in there right now. um, I'm expecting a ton of volatility over the weekend. I'm not sure if that means a big drop or anything like that, but definitely is not off the cards to put another correction in there. Um, and so other than that, I will see you guys on Tuesday. I will have charts for Tuesday and ideas for Tuesday, and we'll pick it up there. So enjoy your long weekend, and I'll see you then. Enjoy.